If you opened your bank account this month and your OAS payment looked exactly the same as last month, you probably felt relieved. You probably thought everything is fine. But what if the number in your account is not the problem? What if the real problem is a number you cannot see? A number sitting quietly inside your CRA file right now? A number that is already scheduled to reduce your OAS payment starting next year? And what if that number is being created every single month by something you are doing completely legally? Something your financial institution never warned you about? Something that millions of Canadian seniors do every single month without ever realizing what it is doing to their retirement income. That thing is your RRIF withdrawal. And if you are taking money out of a registered retirement income fund right now, or if you are turning 71 this year and your RRSP is about to convert automatically, what I am going to show you in the next few minutes could change how you think about your retirement income for the rest of your life. Robert McLean spent 34 years working as a civil engineer in Ontario. He contributed to CPP every single paycheck. He built up a solid RRSP over his working life. When he retired at 66, he felt prepared. He had CPP coming in every month. His OAS started at 65. He had his RRIF set up, and his financial advisor told him to take the minimum withdrawal every year to keep his taxes low. Robert followed that advice. Every year, he took his minimum RRIF withdrawal. Every year, his CRA return looked clean. No penalties, no flags, no problems. Then, in the summer of 2024, Robert noticed something. His OAS payment had dropped. Not a lot, but it had dropped. He called Service Canada. They told him his OAS recovery tax had been recalculated based on his previous year net income. His RRIF withdrawal had pushed his total income above a threshold he did not know existed, and the CRA had already begun quietly recovering a portion of his OAS. Robert had never heard the words OAS clawback in his life. His financial advisor had never mentioned it. Service Canada had never sent him a warning. He found out only when the money was already gone. What happened to Robert is happening right now to Canadian seniors in every province, and the number of people affected is growing every single year because RRIF minimum withdrawal percentages increase with age. The older you get, the more the government requires you to take out. And the more you take out, the closer you get to the threshold that triggers the OAS recovery tax. If you are receiving OAS right now, and you have a RRIF, this video is specifically for you. Stay with me because what comes next could protect thousands of dollars in your retirement income. Before I walk you through exactly how this works and what you can do about it before it affects your next payment, one quick thing. The next CPP and OAS payment date is June 26, 2026. Between now and that date, there are income thresholds, CRA calculations, and benefit recalculation triggers already in motion that will affect thousands of Canadian seniors who have no idea this is happening. Service Canada will not send you a personal explanation of how your RRIF connects to your OAS. The CRA will not call to warn you before the reduction happens. That is simply how the system works. This channel exists to give you that information before it costs you money. So, if you are not subscribed yet, please do that right now and turn on notifications, because this video is one piece of a much larger picture that is changing every single month in 2026. Subscribe now so the next update reaches you before it affects your payment. Now, let me show you exactly what is happening. The first thing every Canadian senior with a RRIF needs to understand is what the OAS recovery tax actually is, and why most people never see it coming. OAS is not a guaranteed fixed payment for life, regardless of your income. Most seniors believe it is. But the government built a recovery mechanism directly into the OAS program. It is officially called the OAS recovery tax. Most people call it the OAS clawback. Every year, the CRA looks at your total net income from your tax return. For 2026, if your net income exceeds $95,323, the CRA begins recovering your OAS at a rate of 15 cents for every dollar above that threshold. The recovery does not happen immediately. It happens on a delay. Your 2025 income determines your OAS reduction for the July 2026 to June 2027 payment period. This is why so many seniors are caught off guard. They earned the income last year. The reduction hits their OAS this year, and nobody sent them a warning in between. Now here is where RRIF withdrawals come in, and why they are the most common trigger that pushes Canadian seniors over that threshold without them ever realizing it. When you have a registered retirement income fund, the government requires you to withdraw a minimum percentage of the fund every single year. That percentage is based on your age. At age 71, the minimum withdrawal rate is approximately 5.28% of your RRIF balance. At 75, it rises to 5.82%. At 80, it reaches 6.82%. At 85, it jumps to 8.51%. And it keeps climbing from there. What this means in practice is that as you get older, your mandatory RRIF withdrawals get larger every single year, whether you need the money or not. And every single dollar of that RRIF withdrawal counts as taxable income on your CRA return. It counts toward the threshold that triggers the OAS clawback. It counts toward the income figure that Service Canada uses to assess your GIS eligibility. It counts toward your total net income in a way that most seniors never fully connect to their monthly pension payments. Canadians who work with retirement financial planners already know this. Their advisors model the RRIF withdrawal schedule years in advance and build strategies around it, specifically to protect OAS. Most Canadian seniors on CPP and OAS find out about this connection only when their payment drops. Now you know before that happens. Let me give you a real number example so this becomes completely clear. Imagine a senior in Alberta. She is 73 years old. She receives CPP of about $900 a month. She receives OAS of about $740 a month. She has a RRIF with a balance of $400,000. At her age, the minimum withdrawal percentage is approximately 5.5%. That means she must withdraw approximately $22,000 from her RRIF this year. Her total income is now CPP $12,000, OAS $8,800, RRIF $22,000. That brings her to approximately $42,800. Well below the clawback threshold. She is fine for now. But here is what changes as she gets older. By age 80, her RRIF balance may still be $350,000, depending on growth. Her minimum withdrawal rate is now 6.82%. That forces a withdrawal of nearly $24,000. Her CPP with indexing may now be around $10,000. Her OAS around $9,000. Total income is now approaching $43,000, still below the threshold, but getting closer. And if she also has a workplace pension, investment income, or rental income, the picture changes fast. This is the RRIF trap. It is not a crisis today. It is a slow-moving number that grows every single year until one year it crosses the line. And when it crosses the line, the reduction to OAS begins automatically with no warning. Now I want to stop here and ask you something directly. Do you currently have a RRIF? And did your bank or financial advisor ever explain to you specifically how your RRIF withdrawal schedule connects to your OAS clawback threshold? Drop your province in the comments right now because I want to know how many people watching this were never shown this connection before today. Your answer helps other seniors watching this video understand what they need to ask their bank before the next withdrawal goes through. Now, let me show you the part that almost nobody covers, the hidden cross-program connection between your RRIF, your OAS, and your GIS. Because for seniors who receive GIS, the stakes are even higher than the OAS clawback alone. GIS is an income-tested benefit. Your monthly GIS amount is calculated based on your previous year net income from your tax return. For every dollar of net income above the GIS threshold, your benefit is reduced by 50 cents. What this means is that your RRIF withdrawal does not just affect the OAS clawback calculation, it also feeds directly into the GIS income test. A senior who takes a larger RRIF withdrawal in 1 year to cover an unexpected expense, a home repair, a medical cost, a family emergency, can see their GIS reduced significantly the following year because that withdrawal appeared as income on their tax return. The GIS reduction is separate from the OAS clawback. They are two different mechanisms. but both are triggered by the same thing. Your RRIF withdrawal showing up as income on line 23600 of your CRA return. One withdrawal, two reductions, two different programs, and most seniors never connect them until both payments have already changed. This is why I say, the RRIF is not just a savings account you draw from in retirement. It is an income trigger that reaches into every income-tested program you receive. And managing it properly is one of the most important financial decisions a Canadian senior can make in retirement. Now, here is something the government does not advertise, and most seniors never find out. There are specific legal strategies that Canadian seniors can use right now to reduce the impact of RRIF withdrawals on their OAS and GIS. These are not loopholes. They are rules that are already built into the Canadian tax system, and they are available to you right now. The first strategy involves the TFSA. Tax-free savings account withdrawals do not count as income for any federal purpose, not for the OAS clawback calculation, not for the GIS income test, not for your tax return at all. A senior who draws money from a TFSA instead of taking an extra RRIF withdrawal keeps that amount completely invisible to the CRA for benefit purposes. If you have TFSA room and you have been drawing from your RRIF for extra expenses, switching some of those withdrawals to TFSA can meaningfully reduce your taxable income and protect your OAS. The second strategy is pension income splitting. If you are 65 or older and you receive RRIF income, Canadian tax law allows you to allocate up to 50% of that RRIF income to your spouse on your tax return. No money actually changes hands. It is a paper entry on Form T-1032 at tax time. But if your spouse has lower income than you, this can pull your net income below the OAS clawback threshold and eliminate the recovery tax completely. A senior losing $3,000 a year in OAS clawback could recover every dollar of that simply by splitting RRIF income with a lower income spouse. If your income is going to be lower in a particular year because you stopped working, because a rental property was vacant, because you had large deductible medical expenses, that is the year to take a larger RRIF withdrawal voluntarily and pay tax at a lower rate. Taking more now when your rate is lower protects you from being forced to take more later when your rate and your total income are both higher. Canadians who work with retirement planners know these strategies. Their advisors run the numbers every single year before the RRIF withdrawal goes through. Most Canadian seniors find out about them only after years of unnecessary clawback have already happened. Here is exactly what you need to do this week. Step 1. Log into your CRA My account at canada.ca and look at your 2025 tax return assessment. Find line 23600, which shows your total net income. Compare that number to the OAS clawback threshold of $95,323 for 2026. If you are within $20,000 of that threshold, your RRIF withdrawal schedule needs to be reviewed before your next withdrawal goes through. Also check whether you received a notice of assessment showing an OAS recovery tax amount for the current payment year. If you did, that amount is already being deducted from your monthly OAS. Step 2. Log into your My Service Canada account and check your current OAS payment amount and your benefit notices. Compare your current OAS payment to what you received 12 months ago. If your OAS has decreased and you did not receive a clear explanation, the decrease may be connected to your RRIF income from the previous tax year. Look specifically for any letter or notice referencing the OAS recovery tax or the repayment amount. Step 3. Contact your bank or financial institution this week and ask them one specific question. At my current RRIF balance and my current age, what will my minimum withdrawal be in each of the next 5 years? Ask them to show you the number. Then add your CPP, your OAS, and any other income sources, and see where your total net income lands relative to the $95,000 threshold. If you are approaching that line, ask specifically about TFSA withdrawals and pension income splitting as alternatives. If you do not have a financial advisor and you want free guidance, Service Canada can be reached at 1-800-277-9914, and the CRA can be reached at 1-800-387-1193. One final warning. Scammers specifically target Canadian seniors around CRA and pension topics. If you receive a call from someone claiming your RRIF has triggered a CRA audit, or that your OAS is about to be suspended unless you make an immediate payment, hang up. The CRA never demands payment by phone. The CRA never asks for gift cards, wire transfers, or cryptocurrency. Report any suspicious call to the Canadian Anti-Fraud Centre at 1-888-495-8501. Now I want to hear from you one last time. Are you currently receiving OAS and taking RRIF withdrawals at the same time? And did you know, before watching this video, that your RRIF income counts toward the threshold that can reduce your OAS? Drop your province below. I read every single comment. And your answer helps other seniors watching right now understand what they need to check before their next withdrawal goes through. What we covered today is confirmed and currently in effect for 2026. RRIF minimum withdrawal percentages are rising with age across the country. The OAS clawback threshold is set, and the CRA is already processing 2025 income returns that will determine OAS payment adjustments starting this summer. Service Canada will not send you a personal breakdown of how your RRIF connects to your OAS. The CRA will not warn you before the reduction happens. Subscribe now so this information reaches you before the next change affects your payment. You spent your entire working life contributing to this country. You built that RRSP dollar by dollar. You earned every cent of your OAS. Make sure you are keeping as much of it as possible. I will see you in the next one.